1. The liquidity pairing effect. The structure of the XRP ledger's native decentralized exchange, DEX, is the primary driver of this phenomenon. The DEX functions as a central limit order book, where users can create offers to trade any issued token. XRP is the bridge currency. XRP is the native asset of the ledger and serves as the most liquid and common trading pair. Many tokens on the Xrpl are primarily traded against XRP. This means their price on the DEX is often denominated in XRP, not necessarily in a fiat currency like USD. Relative value shift. When the USD price of XRP falls, the exchange rate between an XRPL token and XRP must adjust if the token's own USD value is to remain stable. Because the token's price is expressed as a ratio against XRP in the order book, it will require more XRP to purchase the same amount of the token. For example, a token is priced at 10 XRP on the DEX. If XRP is worth $, the token's implied USD value is $10. If XRP's price drops 50% to $0.50, but demand for the token keeps its USD value stable at $1,000, its price on the DEX must now adjust to 20 XRP. An observer looking at the token's price chart in XRP terms would see a 100% price increase, even if its value in USD remained unchanged. 2. Hedging and risk management behavior. During periods of price volatility, traders often seek to mitigate risk by moving capital out of a volatile asset and into assets perceived as more stable or having different growth potential. Flight to stability. The XRPL ecosystem supports various types of tokens, including stablecoins, which are designed to maintain a stable value pegged to an external asset like the US dollar. When the price of XRP drops, traders may sell their XRP for a stablecoin on the Xrpl DEX to preserve their capital in USD terms. This action creates direct buying pressure on the stablecoin's XRP trading pair. Seeking alternative yield. The Xrpl is expanding its decentralized finance, DeFi capabilities, leading to the introduction of yield-bearing tokens. Some traders may rotate out of XRP not just to avoid losses, but to deploy their capital into these other assets that may offer staking or liquidity-providing rewards, creating a hedge against XRP's price performance. 3. Speculation and arbitrage mechanics. The characteristics of smaller, less liquid tokens on the DEX can amplify price movements, which in turn creates opportunities for arbitrageurs. Impact of low liquidity. Many XRPL tokens have a much smaller market capitalization and lower trading volume than XRP. In such thin markets, even a small wave of buying pressure can lead to significant price increases, a phenomenon known as slippage. As traders hedge or speculate by moving out of XRP and into these tokens, their buy orders can quickly consume the available sell offers in the order book, driving the token's XRP-denominated price up rapidly. Role of arbitrage. Arbitrage is the practice of profiting from price differences for the same asset across different markets or trading pairs. The XRPL's fast settlement times, 3 to 5 seconds, and low transaction fees make it an efficient environment for arbitrage bots. When a token's price in XRP terms spikes on the DEX, but its USD price on a centralized exchange does not, an arbitrage opportunity is created. Arbitrageurs will exploit this by buying the token on the external market with USD, selling it on the Xrpl DEX for the inflated amount of XRP, and then converting the XRP back to USD for a profit. This process adds to the buying pressure on the token's XRP pair, further contributing to its price rise relative to XRP. 4. Psychological and community dynamics. Crypto markets are heavily influenced by collective sentiment, often amplified through social media. Ecosystem focus. When the price of a primary asset like XRP is declining, the community's attention can shift to their projects within its ecosystem. This can be driven by a search for a hedge or for a multiplier effect, where smaller cap tokens are perceived to have a higher potential for percentage gains. Narrative shifts. Positive news or developments for a specific XRPL project can create a compelling narrative that attracts investor interest, especially when the broader sentiment around XRP is negative. This focused buying, even if speculative, can be enough to move the price in a low liquidity environment. In summary, The tendency for XRPL tokens to rise when XRP falls is not a simple cause and effect, but rather the result of the interplay between the DEX's core mechanics, rational hedging, speculative trading, and the powerful influence of community sentiment.